The broadcast is now starting. All attendees are in listen-only mode.
Low face warriors, how's everyone doing? Hi, Craig, Joshua, Paul, how are you? Patrick, Michael, KT, everyone doing okay? I just want to put trading in perspective, okay? Fear? Fear of what? Losing money? What do you think the guys who were charging into machine gun fire on D-Day felt? Okay? Not risk of losing money, risking it all. Okay? So put it in perspective, okay? D-Day. Okay, so you were happy in Belgium when the Allies hit the beaches, right? Okay, also, the most important issue besides trading is who you trade through. And I'd contact Trent because he knows the gamut of brokers to find a solution for you. I know Paul found one. Trent's a great guy to talk about the business with, but I want everyone to think about if they had 100,000 with their broker right now, could they sleep at night? Security of funds is the most important thing. So know who's regulating it, know their history, so that at night you don't want to have to do 30% and then have your funds disappear after you're up 40%. You don't want them to disappear if you're down 20. So something to keep in consideration. On the website, we have a link right to him. You can find it everywhere at the top of the page. That's not it. So Forest Park FX. I was walking through the park one day in the merry, merry month of May, and I ran into Trent. He told me to let my broker get bent, and he found me a broker to serve me in every way. So here you go. And if you're overseas, while you're trading, you end up having your prescription, not prescription, I better get to the doctor. Your subscription for free. Trent, right here, William. Okay. What move are you missing, Michael? I miss moves every day. Okay, I want to take the pressure off everyone in here. I miss trades every day. And you know what? It's okay. Write it down. I miss trades every day, and it's okay. You know why it's okay? I guarantee you there'll be another opportunity. There'll be another trade. Okay, so fear of FOMO. Oh, yeah, if you have FOMO. All right, let's get to a couple of the markets here. I think we're at some critical junctures, especially for US dollar yen bears. So this was a big decline in rates. We saw it here at ForexAnalytix, a 3-drive pattern. Blake caught a nice pip in the bonds on the long side. And here we are recovering, and we're between 50% and 61.8 back. Why is that important to yen traders? Because look at that, and then look at this. Okay. So if you're a believer that yields are heading lower, and I look at this and my goodness, what kind of low is that? Anyone know? Come on, I know a lot of you guys know. What kind of low is this in yields down here around 275? That's right. Okay, so what does that imply? Anyone know what it implies? More to come, Michael Bergman. Okay, so this, I think we're getting close. Could it keep pushing up one more time, 61.8, but I'm looking for equality at least. Okay, and this was, about 313, almost 0.4 move in the 10-year. So if we got a 0.4 from, say, here, it would take us to, 260. And it's no coincidence that 260 right here was a major breakout around 263 double top. Oh, look at this. Weekly moving average coming in there. So that's where I think we're going. And if that happens, the yen's going to fail too. So, I had someone asking, why is everyone bearish yen yesterday? And perhaps they don't understand this correlation, okay, between yields. So if you're looking for another break in yields, at least Greg would probably call it ABC at least, or 1, 2, 3, if it turns out to be major. Or maybe this is just a second drive and I'm all wet and we're going to get, there's always that, right? New highs. I'm going with this as a failing rally. We're going to come off. Still think that part of it is going to be some type of event risk in the S&Ps. Yesterday I talked about day trades at 27.50, so it worked once well and worked real well here. So you had another non-confirmation on the 1 hour here, was good for 13 handles. And I still think that between here and 60, there's some type of shortcoming that could take us all the way down in a very fast fashion underneath the 27 handle. What's going to give you your first indication of that happening is going to be closes back under this breakout at 27.40. And I just want to leave you with crude here. Very possible this was the beginning of a fairly large correction that could occur in crude. Went from about 4 to 6, pulling back about a buck. I think you could probe it on this, looking for 6.5, and if we get through there, I think we could see another test up towards 68. So just a few ideas for everyone. Any questions? Just wrap it with the dollar. Dollar looks on target to head down towards this 92.70 level. It's trying to break down out of this, something I talked about. Is this it? Okay, it's probably a 1 hour. Kind of a descending triangle where you have this and you have a flat bottom, and that actually measures if we break down today under this support level right around to 92.5, which would be classic. So here's your descending triangle right there. Got a little bit of a breakdown happening here. And that's it. Okay, so also don't forget to subscribe to our service. You take a look at, we're going to have a new platform. It might be a rumor, but I think after all this work they put into the site, the prices are heading up soon. And I know they grandfather anyone who gets in here, but a lot of interesting positions. Blake long pound, a little bit underwater. Look at Andre's playing with the Mexican peso. Looks like he's okay for now. Greg liked the short here at 970. So if you liked it at 970, you got to like it at 1020. And, if you're selling it, even if you don't take all of the analysts' entries, I really like the invalidation points that you guys could use for stops if you're finessing your own entry. Everyone with me on that? So if you have this, where these guys are going to admit they're wrong, and if you traded it a little differently, these are going to be good numbers for you to know that if they're getting through them, you're fighting the trade. Okay, it's a one mistake business. I've seen day traders turn into scalpers, into swing traders, into position traders, into an investor by not admitting they're wrong. So this is the most important, I think, column here on the pips. Okay, I'm going to bring in Blake. you said you were saved, Blake, but yesterday you said your coffee maker crapped out on you, so I thought you'd probably have a brand spanking new one today.
No. Oh, first of all, I do have Amazon Prime, which it's great to have just in case in those types of situations. No, my coffee maker, I don't know what happened to it. I cleaned it with vinegar. I ran vinegar through it, but I actually I think it was the filter was pushed up against the.
It's like your coffee maker is like Lazarus.
It
from the dead.
It did. Thank God, because it is my lifeblood at 3 o'clock in the morning. I'm a coffee fanatic because it's it doesn't matter if it's 110 degrees here. I still drink coffee.
Yeah. What's the high of the day going to be there today?
Probably about 107, 110, something like that.
Wow.
It's great pool weather. I'll tell you, I played Marco Polo with my kids for like an hour in the pool yesterday. Is great. This is the funnest game for them, and for me, it's great. I always just choose to be Marco, I guess.
You ever see the commercial, Blake? They show a guy in the pool, and the kids are calling Marco Polo, and he's actually in the pool, and he's going, I'm here. It's some commercial, but Marco Polo. Anyway, what currency would Marco be interested in today?
Marco, if he's a Spaniard, would be interested in the euro long. If you notice here, we have this.
Went right to your line, Blake, after yesterday's presentation.
Yeah, we came retested, and matter of fact, my stops were at 40, so that was good.
Nice.
I was happy about that because it's over 100 pips higher now. And the euro dollar has this inverted head and shoulder pattern now, and you can see relative strength is pointed higher. This is a 4-hour chart. Relative strength is pointed higher. We're not overbought. We're confirming this move, higher here. So the euro looks bullish. And yeah, it's come off a few pips this morning, with risk appetite, but overall the euro is very constructive. There's a lot of commentary this morning from ECB members. So yesterday, what really saved the euro was always sources. You know how they always say sources, the damn sources. We don't know who those damn sources are, but the sources were saying that the ECB, this next meeting that's coming up next week.
Yeah, they're going to talk about ending QE.
Yeah, like it's a live meeting to start talking about exit. So ECB meeting is right here next Thursday. So because that really spooked anybody who was short the euro yesterday. You can see it was drifting lower. Like I said, it was getting real close to my stops. My stops were at 40. So my stops were basically underneath this trend line here. And because I figured we might come back and test it, but as we were getting down there, I was like, this is getting a little too close for comfort. And then those comments came out and the euro spiked right back up. I actually added to that a little bit on that spike, sold some yesterday at 1.7. I bought some more at 116, like 80 something, and I sold it at 117.10. The little bit that I had bought, I just kind of added to it. And then it's been making its way up here from, hawks, the ECB members that made hawkish commentary this morning. Here, let me see if I can grab
Blake.
Yeah, hey.
Hey, sorry to interrupt. Hi, everybody.
Nope.
I was just thinking, isn't it a bit odd that the ECB are starting to be quite hawkish days after this whole spike in Italian yields and this whole uncertainty that's coming? I mean, I find it quite strange, the timing. I mean, and personally, as long as this big uncertainty from Italy isn't resolved somehow, or at least unless they kick the can a little bit further, I mean, I don't see how they're going to start tightening. I don't know. It just seems a little bit weird to me.
Yeah, I mean that's what and guys from my office are like, man, they're buying their own debt. It seems like they're going to do it for infinity as well. So it does, and it does, but the market's still believing it, right? You have Pratt says it's clear that next week the governing council will have to make this assessment, the assessment on whether the progress so far has been sufficient toward a gradual unwinding of our net asset purchases. That was this morning. Weidman, who's obviously a hawk, inflation is now expected to gradually return to levels compatible with our target. He added that the market expectations that the ECB will halt its vast bond buying program by the end of this year are plausible. Klaus Knott says it's reasonable to announce the end of the net asset purchase soon. And Ardo Hansen says market expectations for interest rates to start a moderate rise in the middle of next year. We have to assess the actual developments. When we're sure that inflation is moderately rising, then the exit should be a bit faster. So, all hawks talking hawkishly, but regardless, Stelios, it's spooking, euro shorts, and technically we've had a great correction in the euro dollar. If you recall, and I know you do, and I know probably normal listeners of the FACE webinar, I mean, we were very bearish the euro dollar when we were up here at 120, 122 to 124.
Yes.
We were saying, hey, this has gone very far. The market was extremely bullish. We are expecting a correction. We got a massive correction. I mean, you go from, let's just say roughly 124 to here at 115. That's a 7% correction in the euro dollar over a couple months, which I mean, from a currency standpoint, that's a huge move. So we had this 7% correction, and here we are, blazing higher. And with the constant talk of trade war, the Fed might be nearing the end of its interest rate hike cycle, coming, the next few meetings by the end of this year. And then you have the ECB possibly reversing course now. I mean, that's what they say, whether you believe it or not. We could have the euro firm up, at least on expectations. And do I think the euro is going back to 130 or going higher than 125? I don't know. It's questionable. I think we really have to see the ECB move, really move in rates to get us higher, much higher than where we're at. But Stelios, I think that we could correct to 120. Which is, this is the inverted head and shoulder pattern extension, right? All right, takes us to 120. It's the 200 DMA. It's the, let's see, roughly a correction, 50% correction of the high to low. So, I mean, it's all very realistic, especially based on how far we've gone.
Yeah, and also you have to look at what the market's pricing in. If you look at Ionia's, the swaps, they're pricing roughly one hike by July 2019, so a year from now and a bit. That could easily, if they start being more hawkish, that could easily go to pricing 2 hikes, within a year. It's not unheard of course.
Sure.
So you're absolutely right. I personally find it difficult for them really to be hiking in the face of such uncertainty, but still, it doesn't mean that the market cannot go ahead and just price it. So I agree with you 100%. And if you remember, we blogged about the dollar as well a couple of weeks ago, and we said, the dollar's been squeezing. What's next? It might take be on the back foot for a little bit. And look what's happening. The euro is rallying against the dollar. So.
Yeah, and matter of fact, let's see where the last blog that, if you guys recall, the dollar squeeze higher may be over. Now what? And that was from you and me that wrote that, yeah. And we are at that level where the euro could correct now, and we could, you know, could see a move higher in the euro dollar and a move lower in the dollar index as a whole. One of the things that I think really has to still happen is we need to see a bounce in bonds, and we need to see a drop in yields. And you can see today, bonds are lower, okay, yields are higher once again. And matter of fact, Dale, are you here?
I am, buddy.
Okay. I know sometimes you have to step out for a second, but if you look at the bond market and you look at yields, and you're famous for your 3 drive. So when you look at this move here on the 10-year yield, and this is a 4-hour chart, is this qualified as a 3 drive? You have 1, right, 2.
Oh.
No?
No, I would look at it, if it is a 3 drive, your first spike high, go to the left. For no, that high, then go to your right. That high, and now this high that we're at right now. It's 3 highs. It's 3 highs. It has nothing to do with what's happening at the bottom.
Okay.
It's basically 2 divergences, Blake. 2 non-confirmations, ideally under 70 for divergence on it.
Okay.
So I mean, the yen
this
has the same.
This would be it on the hourly, right?
Yeah, yeah. So it's between here. Sometimes on the 3rd, you'll actually get a fractal where you get 3 drives within the 3rd one. So you know, could still do some work here.
Yeah. Okay. All right. Anyway,
Yeah.
I thought it'd be something for everybody to look at, and I think that yields really need to turn lower for the dollar to you know, turn lower as well. I think that's that has to happen. But you know, you got the euro dollar, which you know, I think that it's going to now find support on dips down to, you know, 117.40. You know, if I had to draw it out, it looks something like this. So if you guys are looking to get long the euro dollar, you might wait for a 20 pip correction to get long. Cable's very similar situation. We have an inverted head and shoulder pattern now that points to 136. And if you look at the pound, this inverted head and shoulder pattern that I'm playing currently on the long side, you know, you could also say it's kind of a rounded bottom. Now we didn't complete the double top, but hell, we came pretty damn close. I mean, we came within 100 pips, which, you know, when you're talking about a, you know, 400 or 500 pip move, it's pretty close. And you could see how the relative strength had been diverging pretty aggressively. I mean, this is a pretty aggressive move from a relative strength standpoint on RSI, which has allowed the pound to really turn. And the pound looks good. The euro, you know, looks constructive. The pound looks constructive. The Aussie, you know, we had strong GDP numbers. We rejected this trend line once again. But I'm going to tell you, if the Aussie dollar breaks this here, I'm going to put an alarm on it because I need to. If we break that high right there in the Aussie dollar, we break through, you know, 77 or 76.70. That's going to be really bullish the Aussie, and this is one of those moves that, in my opinion, could really lead further dollar weakness if we see, you know. Yeah. Hey, good morning.
Good morning, mate. I'm very sorry to interrupt, but I had to interrupt having to do with the Aussie because I was warning people yesterday about it during the webinar hours. We had a major breakout in copper yesterday. So perhaps copper is leading Aussie, which, as you very well said, might end up leading the dollar. So we might want to take that into consideration.
One of the best traders that I know got really bullish the Aussie over the weekend, and that has proved to be a massive move. I mean, we've gone, you know, from basically, you know, 312 to 323, and you're right. The copper market looks extremely bullish, which, You know, the Aussie.
Exactly, that's the breakout. Exactly that.
Yeah. I mean, the Aussie, you know, is looking bullish too. And then you have, like I said, the GDP numbers have fortified that. Citibank went long Aussie yesterday at 76 or 75.99 as well. If you were in the chat room, I told everybody that they were going long yesterday. But I mean, look at the Aussie. So this is the daily. This is the broken trend line. We've reversed. RSI is breaking higher. You can see how RSI is broken higher. Yeah, that could lead to a move. 200-day moving average is at 77.50 roughly, 77.60. I mean, the Aussie could, vault up another 100 pips pretty easily. But, again, if the Aussie rips 100 pips, what's that do to the euro? Does the euro, and the cable follow suit, 60, 70, 80, 150 pips, for each one of those pairs? It's entirely possible. Kiwi dollar, I mean, the Kiwi, whether you, trade the Kiwi or not, and I really have left the Kiwi alone as of late. The Kiwis had a pretty big bounce, and we're at a 38% retracement. So, we get above 70.60, which we're, only 15 pips away. I mean, we could make a move for the 200-day moving average or
the 71.80, which was the previous range's support.
Yeah, exactly what I'm drawing here, the 71.80. So I think that's all very, very doable. And look at the Canadian. Canadian's getting demolished. Now, the Canadian, I know I tweeted it out yesterday, right when we were right here at 130.50, and we've reversed and we caught everybody off guard. And Mnuchin yesterday, late in Asian trade, or early in Asian trade, just be early in Asian trade. He said that we should exclude Canada with the tariffs. And the Canadian currency has been really nonstop strengthening since then. I mean, it happened here. You can see this is where it happened. This is a 5-minute chart. This happened in Asian trade, and then we've been straight down since. We have Canadian trade balance coming out in 3 minutes, so that's also should be noted. But yeah, the Canadian's been really strong. The dollar Canadian weak. I think everything that we're seeing here is really pointed towards continued U.S. dollar weakness. But the exception right now to the rule is the dollar yen. But the dollar yen is starting to show some weakness after we've come back and challenged. You can see we had this. Oh, Dale, where are you? This is your 3 drive, right? 1, 2, 3. He's not here. But you got your 3 drive divergent relative strength on an hourly chart, and if you use ForexAnalytix, you got that chart about an hour and a half ago when we were up here at 110.17 or something. But you can see that it's already starting to pull back, and yeah, if equities come down or if yields start to pull back, we could see a move higher in. We could see a move lower in the dollar yen and the dollar just across the board. So anyway, so I'm going to turn it over to Steve because we do have data coming out. Steve, you're going to be out tomorrow, correct?
Yeah, I'm leaving actually shortly after the webinar for 22 hours. I'll be flying out, and then within a day.
Have a great 22-hour trip.
Thank you. Thank you.
All right, and be safe. And I'm gonna turn it over to you. I don't know, you're gonna have to take the screen because I know
absolutely.
The login's a little different today. So, all right, guys and gals, thank you so much. Stelios, thanks for all your commentary. Dale, thank you much. And remember, guys, visit Forest Park FX. They are our sponsor for the FACE webinar. If you enjoy what you hear here on the webinar, make sure you support our sponsors. So, thank you very much.
Good hunting, Blake.
See you later,
guys. Bye, guys.
Stelio, we have Canadian data coming out in a few seconds. Hi, Dale, by the way.
Hi, Steve.
Yes, indeed.
Okay, let's.
We have some US data as well, but mostly Canadian data.
Okay, let's focus
building
on
permits, trade balance.
Yeah, let's focus on the USD CAD for a few seconds until we get the data and see the initial response, and then we can chit chat about the rest. So this is the USD CAD, as you see. Okay, must have been decent because I see the Canadian strengthening.
It's not out yet.
Okay,
it's just out now.
Somebody, as it seems, is yep.
Well, building permits was very weak, but trade balance was better than expected. So theoretically,
unit labor cost rise 2.9% in annual rates. Okay, that's actually quite important. Non-farm productivity weaker than expected. True. Trade deficit better than expected, though. I think the market probably pays more attention still to the unit labor cost rise, which is 2.9%, which is quite decent. And we also had somewhat better than expected US trade deficit, 46.2 billion, in comparison to 49 billion that was the expected print.
Yeah.
Okay.
It's still near the 50 billion mark. So a couple of billion here and there is not going to make a huge difference. Yeah, I think the main number is the unit labor cost, like you said. That's the main one.
Because in essence they're pointing forward to probable inflation, which, as we know, it's a major focus for central banks, theoretically speaking, at least, because things have been a lot more mixed in actuality. Anyhow,
I think it will be interesting to see what trade balance does in the next few months following the various Trump decisions and all that. But we have some time until that all comes to effect.
I agree, yeah, and not only that, until we also see some, because we also have some pass-through time that will be required, for adaptation to the new rules, etc. So yeah, it's going to take some time for us to actually gauge what is going to be the actual effect on the markets, and we can then talk about it. We can discuss it. And now, having to do with the USD CAD, people that are listening in the webinar, they know that I have been advocating in not actually seeing much of an upside. I was saying that I remain neutral. I haven't been trading it because it's very choppy, and I think there are better opportunities out there. But if I had to be something, I said I would be short. Because to me, this recovery that we're seeing here doesn't seem all that strong. I mean, this formation looks to me more or less, a consolidation higher. So it really wouldn't surprise me if it end up failing. Once again, we had a rejection from this zone that is around 130. Yesterday, we actually penetrated that for quite a lot, but we pulled back and we actually closed below it. And now another move lower towards the 128 zone, 127.80, 128 seems very likely, but I do think to see any kind of follow through, we're going to finally at some point need to see a breakout from this zone, either above, either a daily close above 130 or a daily close below, let's say 127.80, for us to extend. Now, where would we extend to? Either for the top of the channel, for the channel's resistance trend line, or for the channel's support trend line. So if you see, both levels are quite some distance from it. So I do think that somebody that wants to trade the breakout from this area, I think that there is a decent opportunity if really trading the USD CAD is what you're looking to do. Now, having to do with the DXY, for those of you that have also been following, you know that since Friday morning, I've been long the Euro USD. So I'm now comfortably in the money, and I'm actually looking for higher levels. I would be looking for 118.50, the minimum, perhaps even up to 120. Same deal goes with the cable. I don't have a position here, but I do think I do see a good opportunity for a rebound that might extend all the way to 136. In which case, I will be looking to actually take advantage of that and start building some shorts. We've already had a discussion with Blake about the Aussie and the Kiwi. There is no question about it. The Aussie is testing currently a very critical level, a confluence of resistances. It's testing this broken trend line support as resistance. It hasn't actually managed to also close on a daily basis above this horizontal support resistance zone. So it remains to be seen if that's going to happen. But as I said, if copper is any indicator, and we know that historically speaking, copper is considered, quite a good barometer for commodity currencies. Today we're seeing the confirmation that yesterday's breakout was the true deal. We had a very big move yesterday. We emphatically closed above the 317, 318 area I was talking about. And I think that we're finally looking into another extension to the upside. I have been saying since many months ago that copper, since it found a low at the very beginning of 2016, has only two modes. One is very well bid mode, in which case it moves most of the times aggressively higher, and the other one is consolidation. So we've had a decently big period of consolidation, and now we're seeing another breakout. So I have no reason that I shouldn't be trusting this, and that might actually play a role in Aussie actually confirming the breakout. So I do think Blake mentioned that as well, that we might have more dollar weakness ahead. Anyhow, that was our initial assessment. We drew that several days ago. I specifically was saying a couple of days ago that we're seeing, after a very big candle in the DXY, 3 days of consolidation, but the price action shows that the market is incapable of actually erasing that big daily reversal that we had. And if a market shows inability to rebound after such a day, the path of least resistance is obviously to the downside, and that's exactly what's happening here. We're seeing another leg lower, another extension. I do think this was my belief, and obviously, I feel even more comfortable with that now. I do think that we should be getting down to retest this area that's anywhere between 92.50 and 92.80. That's going to be a decent area of support, but at least towards that end of at least the high end of this zone, I think we should be getting there one way or another. In which case, at least a few more days, if not a couple of weeks of dollar weakness, should be expected. I will be very gladly taking the opposite side, meaning buying dollars for at least one more move higher in the dollar, but not yet. As I said, I have specific levels which I'm looking for. That's 136 for the cable. That's 118.50, 119.30, maximum 120 for the Euro USD. I might start building a position. I anyhow always like to scale in and out of positions. On the other hand, the other position that I'm currently holding is the long S&P position I established at 27.20. So this is still looking good. I do believe that we should see an extension towards the 2800 at the very minimum, because I would really not be surprised even if we push straight to new highs. But even if this proves to be like a move within a larger consolidation, I do think that 2800 is a good area to aim for. Nasdaq is also playing very nicely with our proposed scenario from several weeks ago, that perhaps this is an ascending wedge, in which case we should be seeing new highs, and this is exactly what's happening. IWM, I remember a friend asked a couple of days ago, if that's a good place to be short, and I said that, listen, we're pushing to new highs. Perhaps we need to push even further to once again test this channel's resistance. If I zoom out, you can see there's a channel here. I should actually extend it. Okay, so why not? We might go all the way up there. We seem to be ready to pass through the 127% extension. So why not perhaps a target up here in the confluence of the 161.8 of this correction, and the channel's resistance might be a decent target for the IWM. Nikkei bouncing from the 22,000 area. If it manages to penetrate the 23,000 area, I think this is also going to be very soon afterwards testing the January highs. DAX testing 12,900 as resistance. If we see more euro strength, that might help. Perhaps the DAX produce more weakness than, for example, the dollar denominated indexes. So in which case, I wouldn't be surprised if we saw one more push to the downside before higher. But anyhow, I do believe that it remains more or less constructive. Same thing with the FTSE. Perhaps one more low for the FTSE before moving higher, because undoubtedly the last move we had that took FTSE to new all-time highs and the RSI to roughly 85, the 85 level, I think should be respected. So looking to buy the dip here is probably the healthier approach. Okay. Now we covered the basics. Let's have a look at a few questions and see what our friends want to know, and we can take some ideas from there.
Steve,
Yes, Elio?
before we start the, sorry, my daughters are shouting. Before we start the questions, I'd like to answer one question our friend Willem asked a little while ago when we were talking about Europe. He says that more and more there becomes a conviction that the northern countries like Germany, Holland, etc., will force out southern countries if they don't clean out their debt situations. They want the euro to become a real stable currency. This is, obviously this is a possibility. Nobody can know what they're thinking apart from themselves, I think. My personal opinion is that the whole EU project was built with a view to make it as big as possible. Now, there will be problems and there will be black sheep like Greece and maybe Italy and other countries. But I personally think that the people in Brussels and the EU in general, they want this to be as big as possible. I think they will see a country leaving, like the UK is leaving, the European Union, as a big failure. I think that's my opinion. So they will, my personal opinion is that they will try to do everything they can to keep everything in place and obviously make the countries at fault correct their own faults. But I think, driving them out will be the very, very, very last resort. That's my humble opinion. Obviously nobody knows, but that's what I think.
No, I totally agree with you, Stelios, and I think the whole concept is being a very broad union. They know that, not all fingers are the same, but if everybody plays by the book, they can actually make sure that weaker countries, get benefited and start catching up, as long, of course, as they are playing by the rule book, as I said. So the concept is generally is okay. It has several flaws, and as it seems, the hardest part is probably bringing together quite divergent mentalities. So that's definitely has been an issue. But it's more, I would call it's more a social issue. Yeah. Now, in the general comment having to do with euro being a real stable currency, sorry, with that part of the comment I have to disagree, because even in a comparative basis, I think that euro has been quite a stable currency. I mean, we can't doubt that. Every currency has its swings. Okay, that has always been the case. But if you ask me, since the creation of the euro, which has been a more stable currency, the euro or the dollar, sorry, but I would have to choose the euro. You know what I mean?
Yeah, I agree.
Yeah,
I agree.
I know that the future for many is not guaranteed. I mean that the euro is going to exist forever, but having to do with the way they trade, I would definitely have to pick the euro as perhaps the most stable currency out there. Let's compare it to the other majors. The dollar has been
the pound.
The pound, yeah, the yen, right?
Yeah,
so
yeah, exactly.
Which one of the majors is the most stable? I think hands-on, it's the euro. So if you can blame them for many things, but for not having created a stable currency, I don't think that can be one of those.
Yeah. Okay.
And the main component perhaps for that, if I may add, is the fact that since the Eurozone, because the euro has to do with the Eurozone, not with the European Union, since it's a collaboration of countries, okay, it's a union of countries, that means that even when you have some extra weakness somewhere, you might have some extra strength somewhere else compensating in essence. So since it's not a single country, the currency doesn't oscillate just because something went wrong or something is looking better, because it's always, you have to give the equivalent weight to, for example, Italy is in trouble now. Okay, fine. I mean, potentially is in trouble if the new government proves to not be prudent enough, having to do with fiscal policy, etc. But still, the euro is not going to be decimated simply because Italy is just one of the components of the machine that's called the Eurozone, right? It's not the whole.
Yeah. Yeah, good point.
Okay, so let's see what we have. Okay, question about gold and silver. So let's have a look at the metals. Gold, making once again an attempt to break above this channel, but as long as it's trading below the 200 DMA and the 1300 level area, I think that we need to remain quite cautious. So I would first want to see a break higher from here, a daily close above this zone before we can be turning more bullish. Silver, we are seeing some signs of life in silver during the past couple of days. So what? I mean, if I zoom out, you can see how tight this consolidation has been, and it's becoming tighter and tighter. I would like to see a break to the upside. I mean, my macro thesis, would point to a break to the upside, and they would love to trade it. But as you see, it's remaining confined in a range. So everything within it is more or less noise, in my opinion, and I wouldn't be attempting anything here. Now, platinum.
There is a little bit, Steve. There is a little bit of confluence around 1670. There's a little zone that you marked, and also the 200 DMA. So we're getting there.
Yeah, but still, it's been so choppy, so that
yes,
I would need to see more to actually commit to it, right? Platinum, once again, making an attempt. It's quite higher from yesterday's lows. Yesterday we had a very bearish candle at some point in the day. Then actually it pared back all its losses to close more or less flat. I'm monitoring this descending wedge. I think this is a very, very interesting technical formation. I was monitoring it since we were up here, as you can see from the drawing. If we do break above it, and especially if we do close above 910 on a daily closing basis, I'm probably going to be buying it. I mean, technically speaking, it's going to be looking quite good. So I do think that if you are to be watching if you want to be doing something with metals, copper is just breaking out. Platinum looks like it's on the verge of breaking out, but of course, we need some confirmation here. Those are the metals to focus on at the moment. Crude, on the other hand, I think it's on its way to the 63.75 zone. That's actually, as we speak, a triple confluence of supports. It's the 61.8 from this last leg higher, let me mark it, this leg higher. It's also a horizontal support resistance zone, you can see it here. It's also previous channel's resistance, which since we broke out of this channel, as you can see, has acted in multiple occasions here, 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 here. Perhaps why not here as well as support, right? So I think 63.75 quite an important level to watch in crude. Okay, let me see what else we have from questions. I'd argue your top trend line en route is not drawn correctly, specifically your bottom anchor. Okay, no problem. Why don't you upload the chart so I can show it, Brian? I'd love to see what you're seeing. I have no objection with that. Steve, what's your view on the bond? Yeah, thank you. Very good question. Thank you for reminding me, actually. To show both the benchmark bonds, which means the bonds, and the treasuries. First of all, quite a nice technical rejection for the bonds, right? 1, 2, 3 on triangle's resistance, rejected. Boom. So we remain, as you see, in a consolidation, right? And we got rejected once again from there. We're currently testing the 61.8 of the last move higher. I wouldn't be selling it here if that's what you ask me. So we're in the middle of this range as we speak. I wouldn't be doing anything with it right here, right now. But if I had to do something, it would probably be buying it, right? Because this is the 61.8. We've already seen a decent move lower. Even a little bounce before lower is likely. So even if that's a corrective move, I do think that it can bounce somewhat from here before moving to the downside. I think the treasuries are quite easier to read because we had a very strong downtrend, right? And since September, this has been forming a descending wedge. The descending wedge broke with a very strong move to the upside, and we're currently down retesting this breakout point. So I do think that there is an appealing reward to risk ratio to attempt being long here. You can never be sure if it's going to work because there is no question that the trend remains lower since for at least a couple of years. I mean, we found a high here in July 2016, so it's almost 2 years. So obviously, you need to exercise proper risk management because still this is a downtrend. But I do think that a rebound from here looks quite appealing for at least one more leg to the upside. So I do think that the next move in the treasuries might actually be higher. That's also why I think that the bonds might first rebound before resuming lower if that's what they end up wanting to do. Okay. What's your opinion on silver? Okay, I covered that. What's your view on the button? I just covered that. Theory on overall JPY weakness. Just risk off. JPY yen weakness we should have with risk on, obviously, right? I mean, not obviously. Lately, it hasn't been acting so much like that, but in general, yen is one of the currencies that are being sold when we have risk on. Now, from a USD perspective, I would like to see rejection from here and turn lower. But on the other hand, I refrain from trading it simply because, as you can see from my position as well, that's long the S&P, I'm not quite convinced that this is a period of time that we should be expecting a risk-off move. And since at the same time I'm expecting some more dollar weakness, but on the other hand, I'm also expecting some risk-on moves, I would rather not get involved with the yen myself. Okay, so I'm staying away from it. Anyhow, yen is currently testing a quite important level. I think that if it wants to resume lower from that break, because you see that this was an ascending wedge, this one here, we broke below it. So if it wants to produce one more leg to the downside, which should be consistent with the basic technicals, I think it should be doing it more or less from here. So I do think that there is an appealing reward to risk ratio to try to be short here. You know where you're wrong. I mean, obviously above the previous high you're wrong, and we in this case we should see a move to at least 108, if not lower. So that's my view on the yen. As I said, personally, I'd rather trade something else. Let me see what else we have. Do you remember what Jim Rickard said? The Euro USD has a history of volatility. Okay. Let's say I agree. Okay. Now, this is the Euro USD. Let's say from 2000 to now. If I overlay the
Martin Dembeck, none of our guests are clowns, and all of our guests come here to edify our community. So, something I was taught, I don't always practice it, but we don't have to say everything we think. Thank you, buddy. Sorry, Steve.
Yeah. Oh no, I'm 100% with you. People are devoting their time to come share their ideas here. I know that with many people we often disagree. With many we agree. But I do think that the basis for democracy is at least respecting the other person's opinion, and definitely we have to do that for our guests, and calling them names is
I facilitated a lot of rooms, Steve. I only had 2 rules: was to show respect to others sharing their work, and the other was not rooting for anyone's failure to rationalize your own inadequacy. That's it. 2 rules.
I'm 100% with you, Dale.
Okay. Thank you, guys. Most of you. Thank you.
Speaking about the Euro USD, first of all, I still believe that, as I told you, that it's a rather stable currency. But on the other hand, I also, since we're here on the weekly chart, I want to show you this. I know we're still in the middle of the week, but if we assume that we're going to close this week more or less where we currently are, or even a little bit lower, this is a morning star formation that we're printing. And if you see the zone on which we're doing so, going back, and I repeat, this is a weekly chart, that's quite an important morning star formation. So from my experience from candlestick analysis, you should not disregard such a message here, because I think that it should produce some follow through. I don't think if we close, let's say anywhere above 117.50 the week, I don't think you should be looking for a 1 week rebound and then an immediate continuation lower. This is a very powerful reversal formation, especially the longer the time frame. So it's obviously more important to see it on a weekly chart than it is to see it on a 1 hour chart, right? So keep that in mind. Keep that in mind. USD Swiss. No, I didn't cover it. Thank you for reminding me. I'll gladly have a look at it. Here it is. USD Swiss striving to hold the 98.50 area. We had indicated since a long time ago. I remember when we saw the first move lower here, and we had a friend asking, that saying that, oh, I remember it very specifically, but I don't remember which friend was. He said that, oh, damn it, I lost the reversal. I was looking to short it yesterday, but I lost it. And I remember specifically that I answered, listen, after such a strong uptrend, I do believe that the pair is moving to at least 98.50 for just a healthy correction. 98.50 has proven now how important it is, because we've actually touched it for the first time like 7-8 trading days ago, and we're still oscillating right on this support zone, unable to break below it. Okay, I'm not saying that we cannot break below it, but I mean this zone has already proved its importance. I do believe that this move lower is corrective. That doesn't mean that it will actually find the low in 98.50. It might drop lower, in which case I would be looking for 97.70. It might even go lower than that, towards 96.40. That's also a possibility. But in any case, I am viewing the move lower as a corrective one. Okay, so I think that sooner rather than later we will be getting an opportunity to buy USD Swiss for a move higher, but we're not there yet. Okay, so a nice, interesting pair to watch, but I don't think you should be looking to pull the trigger right here, right now. Euro yen, by the way, so I don't forget, we said that the first area of resistance is the 129, quite an important area. We are breaking above it, in which case now once again the important zone becomes the 131.50. I've already booked my profit several days ago, so I have no risk on the table here. I would like to see it resume to the downside, but I'm not going to be jumping the gun. Dale, I think you've left your microphone on.
Sorry.
No problem at all, mate. So Euro yen, nice V-shaped recovery so far. Watch 131.50 for resistance. I was short, from a long time ago. I booked some nice profits. In all honesty, I wouldn't be buying or selling it right here. I would be gladly selling it if I saw a nice rejection from 129. But now that we've penetrated through it, I'm going to just be staying sidelined until I see again some type of technical formation that I like. On the other hand, I would rather be shorting the pound yen, which still hasn't passed through the critical area, because the critical area for me is 147.50, but most importantly, this broken trend line support. If it does end up acting as resistance here, and we do get a nice rejection from here, I think it's going to be a very appealing proposition to short it for another move to the downside. So I'm monitoring the pound yen very closely. I'm going to be jumping on board, establishing some short positions if I do see a rejection from here. And I'm going to be feeling quite nice about that. I was looking to take a position here some time ago. Unfortunately, it broke down when Stelios and I were in Cyprus, but perhaps it's going to give me the opportunity to do so now. Thank you for your kind words. Steve is awesome, gives his views for free. Okay. Okay.
Do we have a guest today?
Yeah, Dale, that's a good question. Who do we have as a guest
Yes,
today?
we have that crude oil fortune teller, Kirk Spano, with us.
Oh, very nice.
Oh, great. I like it.
And Kirk the charlatan has predicted everything. He talked about Chesapeake last time he was on. Anyway, there's some stuff going on that he knows about that I haven't heard about. So he's been right since Faith started. So stick around if you want to know what's happening.
Absolutely.
In the Middle East.
But by the way, there are a few questions that I didn't have the time to cover, but I'm going to do that tomorrow. It's not that I didn't read them. It has to do about Singaporean dollar, about the Nifty, and a couple more questions. I will be more than glad to cover them tomorrow. So if you ask them again tomorrow, I'm going to prioritize them.
The day after tomorrow. You mean the day after tomorrow? You're not here tomorrow.
There is a chance that I'm going to make it here tomorrow as well.
Okay. Okay.
I can't promise that though, right? Because I'm going to be in Rhodes. Okay.
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 So I'm going to bring. Thank you, Steve.
Thank you.
No, you can't fade Gartman anymore. You're rich enough. No, yeah, you have to start taking his trades. Every trade for the next 12 months. All right, Kirk. All right, Kirk, I'm passing you the ball, buddy. You're my geo go-to guy in the Middle East. Thanks for taking some time today before you leave for your poker championship.
Oh yeah. I might come back broke.
No, I don't think so. Let me ask you something though. When Chesapeake blew to the upside and your leaps doubled, did you sell half?
I sold about a third. Okay,
yeah. It's kind of like standard operating procedure. Then you have a free trade. The market's paid for your trade.
Right. Or made it very, 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 very cheap.
Yeah. Excellent call, buddy. So since we talked, of course, our embassy was moved to Jerusalem, and we had some violence there. And there have been some exchanges between Hezbollah and Israel. And you're talking about that. I didn't even know there was an attempted coup in Saudi Arabia. Why don't we start there?
All right. Well, so let's. They actually posted it on oilprice.com eventually. Back on April 21st, a couple of days before we talked last, I didn't know about it at the time. There was gunfire outside and inside the Royal Palace in Riyadh. And I actually found, it's not in here, but I actually found the Twitter feed that was reporting it live, and the YouTube's, some of the tinfoil hat guys, they actually get some things right once in a while, and they have it up on YouTube. So back on April 24th, it appears as if there was an attempted coup or a violent protest. And the rumor is, and it seems like this rumor has some legs, is that the Crown Prince Mohammed bin Salman was shot. And
okay, so then this is a reprisal for the crackdown that he imposed by, imprisoning people in luxury hotels.
Or not only that, Al-Qaeda is not exactly pleased with him for giving women the right to drive and trying to create a more secular society. You have all sorts of princes who are pissed off that he's not letting them keep their stolen money. So, I don't know if Prince bin Salman is the right guy to try to lead the kingdom to a more secular, more prosperous for the rest of the people sort of society. On the surface, it looks like that's what he's doing. I think he's fighting with a lot of trends in Saudi Arabia, including, Wahhabism. There's a lot working against him to try to transform that society. Now, so the question becomes, is he really trying to transform that society, or is he just trying to get the money for himself? Hard for us to know, right? But there is this huge conflict between Prince Mohammed bin Salman and his supporters and his father, and some of the disaffected princes and the extended family, the cousins, who were used to just scooping money out of Saudi Arabia's oil wealth for themselves, and now they can't do that quite as easily anymore, or maybe not at all, and maybe they're just living on what they have, which is certainly still millions. But yeah, it's interesting what's going on over there, and I will tell you, with everything that's going on, you once asked me, when do I think the conflict with Iran will come?
Yeah.
I think it happens before the midterm elections.
Okay, so interesting, there's a couple of things. Tell me what you think about this. A great uniter when there's strife and political division is a war, because, even the enemy of my enemy is my friend, even within nations. And that could be right around the time as well where Mueller releases something. So that makes sense. You think before the midterms. A lot of these wars also happen in September around the high holy days for both the Muslims and the Jews. Right. So, and what do you think is going to be the catalyst? And is the U.S. involved initially, or is it just Israel, Saudi Arabia against Iran?
Well, remember way back when I said this. Can you see my screen?
Yeah, we got it, buddy.
Okay. I way back last September, I said an Iran war is coming. And, if you take a look at the 730 comments on this article, and I will tell you, they are not all complimentary. And one of the things that I say in this article, no point in bringing it up, but one of the things I say in this article is that at some point Russia will shun or ignore or maybe even outright turn on Iran. And I think that if Iran really starts to, if they threaten one more time to produce nuclear material, I think that would be enough for the Israelis to bomb them.
Okay.
All right. I don't think they actually have to do it. I think they just have to threaten it one more time.
Okay. So let's talk about a little bit more recent history with the 8% plunge in a week from 72.80 that I nailed on a third drive. There are actually 3 drives up there. So one of the best calls I've made in a year. Do you think we have to do some more work? I was thinking maybe we could bounce back to around 68 or 70 and then have one more wave back down towards low 60s before we get going to the upside. You're talking about this upcoming OPEC meeting. Maybe that's enough to at least generate a correction in this recent route. Or are you looking for just a blast to new highs from these levels here?
I'm not a good enough trader to know that. I was watching Dan Dicker, who I've appeared on his show on Bloomberg the other day, and he said, most of the negativity in oil is getting priced in right now. Could it bounce down twice? Sure, it could bounce down twice. It could drop a little. It's dropping a little today. It could rise up, on a relief rally and then test the bottoms. I've been looking at low 60s. I think that's what you're looking at as the ultimate bottom. That makes a lot of sense. But here's the thing that I will point out is the same people who are like uber bearish on oil are the same people that were uber bearish on oil when it was 48 and 44 and 46. You know, the reality is that the 5-year average has been met. Granted, the 5-year average is a little higher right now because of the push in oil production by OPEC a few years ago. So, you know, could oil inventories stand to come down even a little further? Yes. The Russians and the Saudis and the rest of OPEC know that. I don't think you're going to see a sudden surge of 1 million barrels into the market. I mean, these tweets by President Trump, I just can't tell you how ineffectual they are on policy around the world. You know, you've got the Europeans who are like, you know, we're sick of this guy. President Trudeau is like, I've had enough of this guy. There has to be a number of resolutions that come soon. Otherwise, you know, you're actually going to get some of these negative outcomes, you know, these unintended consequences that people worry about, whether it's from trade or oil policy. But, you know, let's keep our eye on the ball here. What's going on in Russia? Russia increased production by 70,000 barrels a day already at one of their facilities. Okay. So, you know, you take a look at that, and then you take a look at the bottlenecks in the Permian, which are going to cap production for a year or a year and a half.
Venezuela.
You know, but then you have Venezuela falling off. You're probably going to get at least 300,000 to 600,000 barrels come off of the international markets from Iran. If Iran does anything that violates the nuclear deal, that means the UN will put on sanctions. And what has India said? India has said, well, we're not going to follow the U.S. sanctions, but if the UN says something, then we're going to cut off Iran. So, you know, Iran's in a real hard spot. You know, I don't know how this resolves for them. I honestly, unfortunately.
Don't you think, you know, we were talking about Saudi Arabia and the U.S. Leadership needing solidarity, and everyone backs their leader if there's a hot conflict.
Right.
Doesn't Iran need a war too, with what's happening on the ground compared to, you know, things have not quieted down. Things are getting worse for their people. You've talked about this revolution that could happen from inside out. Do you think it would continue, or people would, you know, unite? That would unite people if there was a conflict.
Sadly, I think you're onto something there. You take a look at the leadership in all three countries, and Israel too, and in Russia, right? So Russia, Israel, United States, Iran, Saudi Arabia. And you take a look at the leadership in all 5 countries, and it's horrible to say this, but the most rational leadership might be in Saudi Arabia. So, you know, a war makes a lot of sense. And not that it's ethically good, not that we want it to happen. It's just with who's in charge and the position that everybody's put themselves in, it looks like it's coming.
Okay. Do you think John Bolton listens to Michael Bolton records?
Yeah, you would think, right? That's how he finds balance. It's like meditation.
So, Kirk, you know, I also noticed you were talking about, I don't know, you're looking for some major rally in wireless stocks. Is that something else outside of oil, that you're not just a one-trick pony, that you're looking at some other things? Am I correct?
I started out as a technology guy. I just realized, and you know, okay, so back in college, late 80s, early 90s, I had some fantastic professors, Israelis, Chinese, Americans, British. I had some great professors at University of Wisconsin-Milwaukee, which at the time wasn't looked at as a major university, and now it's getting there. And the reality is that they taught me about oil and technology and the Middle East and all these things. And for years early in my career, oil wasn't a big deal, right? It was all tech in the 90s. Right. So I learned tech. And about 1999, I had this come to God moment. Actually, it was late 1998 when I saw Jimmy Rogers on CNBC talking about we're in a bubble and you need to sell everything and start looking for commodities. So I'm standing there in a towel after getting out of the shower, hearing him say this on CNBC, and the three talking heads on CNBC laugh at him. I'm like, well, okay, here's a guy who's a 37-year-old self-made billionaire who does whatever he wants, and then three guys on TV trying to hawk stories. I'm going to listen to the little guy in the bow tie. And so I got into commodities, and two of my very first oil stocks were Petrobras and Occidental Petroleum. And, I rolled those up, and, I got hooked, and I started reading books, and I was like, oh my God, oil controls almost everything in the world economy at the time. And that's still important, right? Oil's still super important. I think technology controls things more now, but oil's still super important and will be for another decade or two. But as you come to the end of these cycles, these super cycles, right?
Yeah.
Any super cycle in history, whether it's the collapse of an empire or a massive change in technology, a revolution, an industrial revolution, whatever, you usually get violence. And I hate to say that it's innate in mankind to not be able to handle change well, but I don't think mankind handles change well. And that's why in my investment letter, I focus on change. If you can handle change well, you're going to do incredibly well financially, probably live a more balanced life. And so when I cover this stuff, whether it's tech or whether it's oil, we need to cover change. So what's going on in tech right now is the pace, the acceleration of change is just amazing right now. We have an upward bending curve, and I don't even know if half the world recognizes it, because the younger people are living in technology land, and just what's next is next for them. They don't get that 20 years ago, I still had a phone that was attached to the wall. You know? So, and I grew up
20 years ago, we had, there were Quotrons.
Right.
To get your prices. Right. And you'd call your orders in.
Right.
Or you would teletype them in. Yeah. So you're saying this curve is becoming parabolic. Is that with things like AI, machine learning, and the Brave New World?
Right. So the article that I wrote this week that you're referring to is the smart everything world can make you smart rich. And I wrote it that way because my friends on the East Coast from Boston are going to like the way that I say smart to them. But, they're going to make you smart rich. But,
You're like Matt Damon, man.
Yeah, I'm trying to be. So, I wish I could have his girlfriends and money. But,
after the tournament, man. Or after you cash out the rest of your Chesapeake calls, I bet you'll have at least a few groupies hanging out.
I am going down with a couple extra bucks this year.
All right.
So the smart everything world does come with a warning, and I put in some of the things to be warned. We have to worry about. Stephen Hawking said a few things before he died. Talks about AI. It's not that the AI decides to hate us; it just decides that they can do better without us. And that's what we have to be aware of, is that we have to make sure that AI is on our side and says, oh, always humans first, So I go through all these things that are coming. Internet.
I just want to interrupt you because we do have, people listening to us. And I actually, someone in our webinar, Savash Yafta, lives in Iran. He says, hi, Dale, I'm living in Iran. There's some sit-in strike happening right now. So they're having sit-in strikes right now on the ground. Yeah. So he's saying, so the chance of some kind of revolution is high.
Yeah, well,
that's
and I
from
think
the ground in Iran.
Yeah, and I was just sitting with an Iranian dissident not too long ago that I know here in Milwaukee, and and then a professor whose brother is a dissident. I'll tell you, to go back to bouncing back and forth here like a Super Bowl.
Yeah. That's great. I'm a Gemini.
I'm an Aquarius, and I don't even know what that means, but so I know, and we can ask him in Iran. So I have the take that most Iranian people are just people, right? I mean, there's not this whole country of people that want to kill us, which is what some of the right wingers here think. you know, the reality is you got a lot of people there who just want to live a happy life. They want life, liberty, and the pursuit of happiness.
Right.
And they're not getting it. And you've got this overbearing religious government that
For 50 years now, 2 generations.
yeah, is it 50 already?
The 70s, right?
Yeah,
almost.
79,
Almost.
40 years
Yeah.
for sure.
Yeah.
So, you know, obviously there's whole volumes of books written on this stuff, but I think the day is coming when the Iranian people get their country back, and I hope it's with as little violence as possible. I have said I hope that the Ayatollah just walks away, but the prevailing theory, the reason why we did the nuclear deal, right? And this will irritate people who are, oh, we're stealing history. Well, the reason they did the nuclear deal is because the Ayatollah is pretty old. So if he dies, hopefully at that point, the more moderate forces decide, hey, this is our chance to separate government from religion. And there's a huge movement there to do that.
I never thought of that 10-year window. So
yeah,
they were kind of projecting the mortality of this regime.
Absolutely.
Okay,
Absolutely.
great insight.
So, I don't know that we have to have a war with Iran. I don't think we have to. I don't think there has to be a war with Iran. I just think it's going to happen because I think that Netanyahu, I think that the Saudis, I think that President Trump, I just think that there's too many people pushing in a direction, and they have conflicts of interest that are massive, right? I mean,
Mike Pompeo has been in favor of a strike against Iran for a long time.
Right, he would have just bombed them, whatever it was, 7, 8, 9, 10 years. Yeah, a long time ago.
Yeah.
I mean, I still maintain that President Obama's biggest mistake was during the Green Revolution, that he didn't support them more fully. Oh yeah, because if we had sent in special forces just to do a couple things, and then targeted the IRGC all over the Middle East, and along their borders and their facilities and in the Gulf, I think that revolution would turn into something different. Now, I'm not the greatest geopolitical analyst on the military side because I don't know if that could have worked. At this point, you have the IRGC all over the Middle East and Iraq and Syria, and now they're spread out. So, I mean, maybe that is part of what's going on here is we needed to get their military in a, back on their heels position. I don't know. But, I pray for the people in Iran. I think that they can be a great piece of the world community. I just think that they're being held back from that right now. And unfortunately, you've got some very mean, motivated to be mean people that they're dealing with.
Okay, why don't we wrap it, Kirk, with, I'm looking at your sheet right here, and it's of interest to a lot of people. And you talk about blockchain here and cryptocurrencies. So I'm assuming that, perhaps maybe, you may not be bullish on cryptocurrencies, but you see the future of blockchain, and that's something that people should be looking to invest in. Ideas on that?
I don't have any companies to give you right now, but blockchain and the Internet of Things, put those two together, BIOT, that is the future.
Okay.
The blockchain is going to connect at the edge, and then take it to wherever you need it to get taken to. Blockchain is going to control processes, communications, transactions, monitor inventories, do automatic restocking. Blockchain is going to control a lot of processes in the world in the not too distant future because of the direct ledger style accountability, right? So it's essentially non-hackable. Are you going to get a few bad actors on those ledgers? Yeah, eventually. But for the most part, this is going to take internet security it's going to take just a massive leap forward. You know, we're going to be able to eliminate most hacking.
Interesting. So is this a tool that Orwell and Huxley saw coming as part of the dystopia, this type of control that's blockchain assists more government control, or as a lot of people in crypto think, the democratization of finance?
Right. So I don't think it's going to be a democratization of finance, because ultimately the banking structures and institutions are so strong, and the governments of the world don't want to lose control of the currencies. And I think it's actually important that they don't, because if we went to a straight cryptocurrency society, that essentially is just a barter system, and that's bad.
Right.
You know, you get a barter system, then you are very susceptible to the business cycle, massive swings. You know, think about the example that you had in Econ 101 with the cigarettes in the prison. We've all heard that example, right? You know,
Right.
so or the way the Wizard of Oz, the Wizard of Oz was written about the banking system in the late 1800s. So, you know, when you take a look at how barter societies work, you realize that growth is non-existent, and in fact, you're more susceptible to depressions. So I don't think cryptocurrency is going to become that big of a deal from the standpoint of what it looks like today. What eventually will happen with cryptocurrencies is that there will be cryptocurrencies that the banking system use, and that the central banks allow, and that the governments allow, and they'll be used for wire transactions and other types of transactions that you want instantaneous. I mean, let me ask you something. If you do a wire transaction right now, do you have the money in 5 seconds? No, you
No.
have to wait. You have to wait hours on a wire transaction.
Right.
The banks want to use blockchain to change that, to make wire transactions instantaneous, right?
Okay.
Why are ACH transactions overnight, right? Why can't that be
Right.
right now? Why can't I go bank to bank, bam, snap of a finger? Blockchain will be used for that. There will be a cryptocurrency. Okay, I'm going to give you one stock. And this isn't going to be a fast moving one, but you can trade it a little bit. But in 10 years, I bet it's a 10-bagger. PayPal. PayPal has got some patents that
And someone else likes XRP.
I don't know much about them.
Yeah. Okay.
But
All right, well, okay.
PayPal's already huge in processing transactions, and
Okay.
if they don't get bought out,
Yeah, they charge a lot too.
But that's going to change because they have blockchain patents that are
Yeah.
ready to go. So they're a big deal. PayPal might do what Visa and MasterCard did in the last 10 years.
Interesting. Yeah, it's pushing 52-week highs here. I'd like to thank you for being here, and let's close this interview with Nostra Spanos. Where could oil go to if your prediction or hope not to be manifest reality does happen with a conflict with Iran? Where does oil spike to in your view by the end of the year?
I think we probably see a little bit over 100.
Okay.
Yeah.
All right.
There are breakout levels out there that are huge, right? You can see 140, 150, 160, 170. I think that because it'll be going into winter and demand will be a little bit lower, because you're going to see a little bit of the bottleneck breakdown, just a little bit in the Permian, not much, because that really doesn't happen until next year. Saudi Arabia and Russia have some spare capacity. I think that 80 is a given. I think that 100 to 120 is probable. We're in a very uncertain period right now. I could be very wrong about this war, but man, it just doesn't look like
I hope you are.
So
but you know what? We have to look at the signs around us and be prepared. And ignorance is bliss. Sometimes I wish I could just stick my head in the sand, but we're here to assess every day, and if things change, we'll change our mind. W.D. Gann said, if you don't learn how to change your mind, you won't have any change left. But so far, a lot of your forecasts have been spot on. Your calls have been great, Kirk. And thanks again for joining us and updating us on what you see happening. And we got, we'll wrap it with what Andrew G. said. Netanyahu delivered an ominous sounding message a few days. He talked up the spirit of the Iranian people while talking down the regime. It sounded like an explanation for an invasion.
Well, President Trump did the same thing, right?
Yeah. Anyway, let's have you back around Yom Kippur, Rosh Hashanah, Ramadan. You know, pick the holiday in September, buddy, and let's get back together. And good luck in Vegas. And you know, enjoy. And thanks again, my trading warrior brother. Everyone, thank Kirk Spanos. You could follow him at Kirk Spano. Kirk, you have
there it
you
is.
can find his stuff. Okay, so you have a website now. This is a website.
Yeah, been around a while.
Oh, okay.
Fundamentaltrends.com.
Uh-huh.
And if you want, you know, I am doing a weekly webinar now inspired by you because I have so much fun here. So if you really want to get enough of me, I've got a YouTube page as well as here. And if anybody really wants to subscribe, use the code 200 off, the number 200 OFF, and first year is only 199 bucks, and you'll make it back on one trade, one position. Now I will tell you, I'm a position trader. If you don't have the patience for longer term trades, you can swing trade my stuff all you want, but I leave that up to individuals because a lot of the people who subscribe, they shouldn't be swing trading. But I know that people on this call, most of you could do it. So the gains that you can make on my stocks, which generally have an upward trend, but you can channel trade them, man, you guys probably kill it.
Yeah, you know, you ought to interview that guy Dale Pinkert on one of your webinars.
You know, I think I might do that.
All right, well, I'm his agent. Just like Donald Trump was his own agent calling people. My name's Don Jackson, and Dale Pinkert's been doing a lot of interviews lately, getting great responses. And
are you with the law firm Dewey, Cheatham and Howell?
Thank you so much, bro.
All right, take care.
Good hunting, Kirk. All right, everyone, that's our wrap up for Wednesday. You're very welcome. Kirk was better than Jim Rickards, Martin. Enjoy the day. I have a guy who wrote a book about all the millions of dollars he made in the market for tomorrow. And I'll see you guys. Good hunting. And most of all, don't just count your pips, count your blessings. Martin, it's okay, buddy. I still love you. Adios, and thank you again, Kirk.
Take care.